I want to talk to you about my friend Charlie Crawford. He's a 10-time NFR qualifier.
Charlie Crawford, time to just shake it out and win. Got it on him fast, set
there
up.
We are.
Here's a day
nice
money
run.
lead. You betcha 3-8.
That's an absolute perfect run. Timing was perfect from the time the first swing is up. He's got the control. Charlie made it happen by being timed up with his horse with the steer, and being able to not just rope, but to pick that steer's head up without changing the momentum for the heeler at all.
We know his beautiful wife, Jackie, all three of their beautiful children, the founder of the Liberty and Loyalty Foundation, which this year will exceed $1 million raised for military and first responders. I've said it 1,000 times. Charlie, it's time to rope, nod and ride, whip and spur. I want to welcome you to the Charlie Crawford Podcast. Let's ride.
Hello, everybody. Today we have BC Insurance Group of Texas here. We have Brandon Carrell. So today we're going to talk insurance. We got the owner here of BC Insurance. And today, we want to know, like, as far as insurance, why has everything gone up? Is there a reason why everything's gone up? Is it because of certain government policies? Is there certain things that go on that could be creating this? Or I think a lot of times when we see insurance going up, is it greedy insurance companies? We want to know, why is it that everything has gone up? Because you look at auto insurance, it's up 22%. In California, it's up 54%. Homeowners insurance, just in Texas, is up 60%. So there's some wild things going on right now. And so we'll get to where we have a conversation about that. But what I like about having Brandon here on the podcast is, I've had a relationship with him for the last 8 to 10 years. He's been my agent. He does all my farm and ranch. He does our auto. He does our home. He does our horse trailers. Helps me out with the clinics that we have here at the house, So knowing if you're going to insure your pickup, your semi, your RV, your trailer, all the little things that in and out of kind of knowing, having someone that's familiar with the industry, I think for me is very, very important. And so, Brandon Carrell, thanks for coming on the podcast, buddy.
Yeah, thanks for having me. Appreciate it.
So you're an avid team roper as well. And so to me, we have a good relationship with there. I like team roping myself. You've been to, I know, at least one clinic, and then you've been to the house for a couple lessons and stuff. So how's the team roping going?
Man, team roping's fun. I like talking about team roping a lot more than I'm talking about insurance, but team roping's fun. It's been good, especially here lately. I feel like last year I was in a drought, I would say. Felt like I just couldn't win. I took 2 horses out to Wickenburg and on our way to Vegas, and one of my horses got really, really strong in Wickenburg, and I couldn't figure it out, and I ended up riding my backup horse at Vegas, and he did fine, but we didn't get anything done out there. And so I come back from Vegas, and I'm just like, man, I got to figure this out. And so I put, before Vegas, I went to your clinic, and the horse I rode at your clinic, we were clicking, everything was working good, but then that's the one that got really strong out at Wickenburg. And so, I come back, and I've just tried to grind it out all year. And I just felt like I just couldn't win. And my wife told me several times, like, you either need to quit or you need to get lessons. Like, she's told me that several times. And so finally I'm grinding it out. I just feel like I'm right on the verge of being able to be more consistent and be better. And that's when I called you, and I'm like, hey, I got to have some help. And so you were, kind enough to let me come out for a lesson, and just, man, it's changed everything. So I think that lesson was probably 60 days ago. And I bet, over the last 3 months, I bet we've split probably 20 or 30,000, so I probably won 10 to 15,000, since coming to you and having that lesson. So it's fun when you win. It's a lot more fun when you win. And just the little things that you showed me and taught me, and horsemanship stuff, and how to keep my horse good. I mean, that stuff's it's been priceless for me. I sent you the pictures of the global, the first weekend we split 2,500, split 10,000 the weekend after we were out here at your house. So, it's been really good, and, it's a lot more fun when you win.
What do you think were some of the things that were like the key factors where like the light bulb, I feel like, came on?
For me, and I've been telling everybody, one was just my hand placement. When I was going
left hand or right hand?
My right hand. So when I go back, when we leave in the box, and left hand forward, right hand back, I was dropping my hand down instead of keeping my hand level. And you were, and you had told me that in the clinic last October, but it didn't really click until a month or two ago when I met with you, and you had me swing the end of that rope, and it was literally 2 swings less if I moved my hand straight back rather than coming from up and then around. And so
just understanding the physics of how to get the first swing up.
Absolutely. And that made all the difference. My big horse was strong. And so when it took me 2 extra swings to get my loop leveled out, my horse was already there. Then I'm pulling, and then the whole thing is off. And so
sometimes it's trying to find out where was the mistake that may have been creating the escalation of mistakes from that point forward.
Absolutely.
Or it's kind of like they say, being able to treat the problem, not the symptom, so like sometimes the first swing is sometimes if it's not correct, it can escalate to a multiple amount of mistakes after that. But the one thing that can get corrected, then all of a sudden the other thing is kind of like take care of themselves in some perspectives.
Being able to swing and ready to throw 2 swings earlier with my horse, it fixed everything. I mean, all of you say 3 words over and over and over when you're leaving the box, but it has to do with your balance,
timing, rhythm, and balance.
Yeah, timing, rhythm, and balance. And that's really where my hand was located, was throwing all of that off. And so, also the thing you talked about, you taught me how to score my horse. He was strong, and do some backing up and things like that on my horse. And so we've been scoring a bunch on him and running less and scoring more. And you made the comment, even if it's the best steer in the chute, score him. If your horse doesn't score, and score. And we've been going by that. And so it's really helped me. I mean, we've had a lot of opportunity, had several high calls in the last 3 or 4 weeks, and it's been fun. Awesome. Roping's fun. It's one of those deals where you got to get with somebody that knows what they're talking about and can take the time to look at the details, because just the hand placement alone has changed everything.
Yeah, we always talk about iron sharpens iron. That's something biblical. But then also, too, is, as far as trying to learn a discipline, a lot of times, man, you just don't know what you don't know.
Yeah. No, that's exactly
And to be able to find just that one light bulb to where like, oh, man, just having that. Like, so that's what's been fun for me, and doing the clinics and doing lessons and things like that is, now that that's what I do for a living, I pay more attention now to all these little details.
Right.
And so then that helps me now to where then if I can understand it and I can teach it, because I know, what we need to do to get ahead of the run, and then being able to help that. And then, like I say, there's so much fun is when people come back, you're like, oh man, that one thing.
That one thing.
That one little thing.
It's amazing. I've probably been one of your biggest advocates lately, because I'm like, pick up the tail of this rope. Let me show you how the difference is. Like, let me show you how your swings, you're ready 2 swings earlier. And I've shown that to several people, and I don't know if they're as impressed with it as I am, but I'm trying to show them, like, man, it was a light bulb literally going off. So.
Yeah, that's great. Yeah, I love that. That's fun. Yeah, because team roping is such a great outlet, because when you're, especially it seems like in the business world, man, to have that release. Corey Coons, he says it's not a hobby, and I kind of agree with him. Because like a lot of people, I think as a hobby is maybe going to get in a boat and being able to go relax. Well, the thing about team roping is sometimes, especially when it's going south, it's not very relaxing, right? And it's also costing you a lot more than maybe a boat rental. But the thing about team roping that I think is also more of a more to than just a hobby is the fact that, man, when it does hit just right, it can pay for itself. It's
fun. I've just been roping probably for the last 6-7 years, and my wife will tell you it was probably a midlife crisis that I decided, I'm like, I'm not getting any younger. If I want to do it, I need to do it now. And so, but yeah, it's a release for me. I mean, I spend time, insurance and the job that we do, it's a stressful thing, and we're trying to take care of people and trying to make sure people have the right coverages and everything. And there's 1,000 things going through our brains. So yeah, to be able to saddle a horse and jump on the horse and get in the arena, man, I don't have to think about anything else for that amount of time. And
having that outlet,
it's a huge outlet.
Yeah. That's why I always talk about, like in rodeo and the Western industry, the great thing about team roping is the fact that it is a lot like golf. When the NFL players, when Father Time takes over, NBA, all those guys, they golf, because they still like competing. They still like to do things that on an athletic level. Well, same thing we have bareback riders in our industry. We have bull riders. And when those guys, decide they still want to compete, still stay in the industry, the great thing about team roping is there's no gender, there's no age, and you get to compete against guys at your level.
Yeah.
And so it's a
it's
very
all
wide,
handicapped, and so you're able to compete. And
it's a very wide event as far as where it's placed in the Western industry.
Yeah,
a lot of them. I forget B told me, but I forget how many hundreds of $1 million industry team roping is. But it's for our event, it is a very strong industry. Well, speaking
Sure.
of team roping, have you been keeping up with what's going on?
I have just a little bit.
Yeah, so it's getting close to the 2-minute drill. So I always kind of say, like, basically Pendleton, there's 3 minutes left in the game.
Right.
And so for the guys that have the game won, you're Dustin Squeeze it. He's winning it still. He's got an over $10,000 lead over Driggers, $175,000. T-Wade's having a great year. Coleman and Medlin, they just came off of a big win in Puyallup last week. 40% of them won the first round, won the second round, and then came in and won the final four. Had a great Puyallup. J.C. Aquo, he's going to win. He's going to make his first NFR. Summer's having a good one. And then Jake Smith. This is Clay Smith's twin brother.
Really?
So he's going to make it finally for the first time. He's been grinding for a long time, heading, healing. He's been healed for a really long time. And then he went to heading and he's got it figured out. 7th in the world with 116,000. I think he's in. Brenton Hall's back. Andrew Ward, one of the best guys out there rodeoing. He looks like he's in with 106. Then you got the top 10 right here. Derek Begay at 98. Rogers had a heck of a summer at 98,000. Luke Brown made a good jump after Puyallup with 98,000. He's 12th. Junior D's has been spinning them back at 97,000. You got Cody Snow. That's just he's just a sticker.
Yeah.
He's on a futurity horse right now. A 6-year-old that's been
really
dialed in, and then he's got his old horse now for some of these one-hitters. So, man, he's going to be hard right there to count out. At 14th with 97,000. You got the Miners, Riley Miner at 96. They've had a great summer. It's getting down to it now where you're looking down, and now 16th with Clay Smith at 96. You got Tanner Thomason at 17th with 96. And then at 18th, Nelson White at 93. So, I mean, literally is a round or a placing away from this whole thing is getting shuffled.
Yeah, it's going to be fun to watch through the end of the year. We're, of course, planning on going to Vegas and roping in the World Series finale. And then also, of course, we'll make our trip over to the NFR as well and see what these guys get done at the end of the year.
Yeah, and you insure a lot of these guys.
Yeah, we insure a bunch of them. And we've got the Stephenville rodeos coming up. I think it's one of the last rodeos of the year. And hopefully a lot of those guys will be able to make Stephenville too.
Mm-hmm. Yeah, because it's during the Governor's Cup, so it's going to be a tough time.
Yeah, it'll be tough.
So I seen where Junior Noguera is number 2. So you got Levi Lord winning at 175. You got Junior Noguera at 162, winning second. But right now, Junior, so Driggers won't enter Pendleton. This is Pendleton week right now. And so right now, Junior and Coleman Proctor teamed up at Pendleton because Coleman steer ropes. So it's a big steer rope in there
I saw
in Pendleton. So they entered up. Well, they're winning Pendleton.
Really?
So there's a chance that little team right there can separate themselves a little bit right there in the packed event. I don't know if you've seen Pendleton, but it has been raining.
We've been watching some of that on the Cowboy Channel. Yeah, we've been watching some of the falls. We watched the steer roper fall last night, my wife and I watching. And so, yeah, the breakaway roper I saw came out on crutches. And so
when you break away there on Monday at Pendleton, so it's a real clay ground with grass on top of it. So basically on a football field. And so when there's any dew on the grass and it hasn't been chewed up, it is really, really slick, really slick. So they kind of, a lot of times try to wait for a lot of that slack to kind of go on where it dries up so it's not as dangerous. So they try to prevent it from that. But when it rains, that's clay and it is slick as ice. It is so bad, so dangerous. If it dries up and quits raining at all and it gets chewed up like it's doing, Saturday afternoon could be almost like regular dirt.
Pretty good ground.
Yeah, because it's chewed up so much. But yeah, Jackie was just talking about one of the girls. I think did she say she was cinched up and about to get on?
Yeah, she said cinched up about to get on, and a girl went down in front of her, and she just
not worth it.
Not worth it.
Pulled out. Yeah, I think a couple
That's
queens
some
went
cowboy
down.
stuff right there.
Loping a straight line horse is going down. So
no, we were talking about it last night. I mean, that's something that if we were in that same situation, we would be wondering what the heck we're doing. Do you ride your good horse or your sure-footed horse? Do you ride a mule? What do you do to make sure?
When you're in a bind and you're in the cutting block and you're on chopping block, you have to
go at it.
Yeah, you have to figure. Yeah, it's a tough gamble.
That's what separates that's cowboy stuff, right?
That's cowboy stuff. But then Driggers ain't dumb. Driggers broke his leg there before. That's why he does not go back. And so in his situation, he doesn't put himself in a situation because that is his livelihood. So you're trying to figure out pride and no,
there's a difference between pride and a business decision.
Mm-hmm,
I mean,
exactly.
No doubt about it.
Mm-hmm.
I mean, and that's the world that we live in insurance. How much risk are you want to take and what's not worth it?
Risk and the reward.
Yeah, what's not worth it.
Mm-hmm.
So.
Yeah, we look here, Dougie Fresh, he's back in there. Douglas Rich.
Yeah.
$116,000. He's number 6. Looks like he's in. And then here we got a few rookies. You got Caden Perfili. I think he won the college finals this year. Buddy Hawkins is back. Jonathan Torres. And then here from 10th to 12th, we got rookies. We got Colby Payne that's going to be possibly making his first NFR debut after watching his partners rope the last couple of years. I know it's been a tough spot for him, so I'd love to see him be in there. Tanner Braden's had a great year. J.C. Flake, another rookie. He's 12th with 101,000. So these guys are still not sleeping, though. They're still flying around everywhere, planes, trains, and automobiles trying to get there. Unbelievable that Hunter Cook is on the chopping block at 13th with 99,000. Coulter Todd's 14th, 98.
Yeah.
Paul Leaves, of all people, is 15th at 98,000. Then you got Brady Minor there. And then 17th, 18th. I mean, 16th from 18th to 19th, nothing but veterans. You got 16th Brady Minor, 96. You got Patrick Smith, veteran, at 96. You got Colin Vaughn On, another veteran, at 18th with 95,000. You got Travis Graves at 92. I mean, each one of these is a win away from just shuffling everything up.
Yeah, if I was one of those rookies right there with that lineup of guys right behind me, I would definitely not be sleeping. I'd be getting after it.
Because you got Vaughn On, who's guy's going to stick at every rodeo. You got, which is Andrew Ward. You got Patrick Smith. If that boy of his head and gets on a hot streak, it doesn't matter if it's averages or one headers. Same thing with Brady and Paul Leaves. But what's going to be real interesting, I think the last rodeo, to get qualified for the Governor's Cup, which is the finale of it. Yeah. That's the 2-minute warning right there to where you're going to make your last charge. That one's it. So I think the last rodeo to get qualified for it, is Albuquerque this weekend. So a guy will know a lot more after this weekend now on who's in the Governor's Cup, because next week, I believe, is the Sioux Falls. And I think Sioux Falls has 60,000 added in every event, equal money in the team roping, except for the breakaway. They're only adding 30.
Right.
But as far as the team roping goes, that's a $15,000 one header, and it's 8 money. So that's another big one. So,
that is a big one.
Mm-hmm. So yeah,
it's going to be shaping up. It's going to be
Pendleton,
cool.
The 2-minute drill starts, and it's
see how it goes
interesting
down.
to watch.
And then watch them in December. It's going to be fun.
Mm-hmm. So let's go on insurance. So first of all, let's get started. How did you choose this industry? How did everything get started?
Man, I didn't really choose it. I feel like it kind of chose me. I went to Tarleton. Cindy and I came to Tarleton in the mid '90s. Went to Tarleton, graduated. I was working at a sale barn all through school, and there's a lady in there whose husband or whose son had an insurance agency, and she just started talking. I didn't have a clue what I was going to do. So I have an ag degree from Tarleton, but I had no idea. And so I kind of went into talking to him. He had an independent agency and kind of went to work for him for a little bit. And then I went to work for a captive company, which just writes one company for a few years. And then Cindy and I opened up the BC Insurance, and we kind of thought when we started it was just going to be she and I in a little office and just doing our own deal and taking care of our customers. And it's just kind of not stopped growing since then. It's just kind of blown up around us. So it's been good.
So what all does BC Insurance Group of Texas offer?
So, we're an independent agency. So the short answer is we can do pretty much anything. Where we focus most of our time and energy is in the farm and ranch industry. We're going to write your farm, your home, your liability, your lease places, your hay, your cattle, your trucks, your trailers, any of those types of things like that. Of course, if you've got rental property like you do, and you've got other investment properties, we can do that. We do commercial insurance. So we've got a whole commercial department that will do, any type of commercial risk that you can think of. We've insured camels and things like that, if that's what you're interested in, but that takes time and that's not where we focus. But we could pretty much do anything being an independent agency. And what we do is, we try to find the companies that are out there that are most competitive, writing the best product, and we try to go get a contract with them to be able to represent them. And the more things we have in our pocket that we can show our customer, it gives us more options for our customer. And that's really what it boils down to.
Who all is your insurance providers?
We do a lot through Nationwide Ag. We write Chubb Agribusiness. We do a lot through Liberty Mutual. There's a company called Bascule that we write that's writing property and equine insurance. Travelers Farm, pretty much all of the major farm and ranch markets that are available in the country, we can pretty much write. There's some that we don't. But then we also do, personal lines carriers. We have a ton of them. And then there's a whole long list of commercial carriers and MGAs, which are general agencies basically that help us shop stuff around the commercial world.
So when did you say you started your insurance company?
So this agency we started in 2016. So it's been right at 8 years.
So what do you feel like what was it like then compared to what it's like now? Because it feels like there's been a lot changing.
A lot of change. When we first started the insurance business, even in 2000, it was very straightforward. Everybody kind of wrote the same kind of homeowners policy, and a lot of things were pretty much just about rate, whichever company was going to give you the best rate. And I don't know if you remember, but in the 2000s, there was a black mold crisis, and insurance companies started changing the way they wrote policies, and they went away from that old B policy that everybody wrote, and they started writing a different policy with endorsements. And when they started doing that, the whole industry, the policies changed. So your house can be listed for the same amount, your deductibles can be the same, and your price be cheaper, but there could be a ton of endorsements on there that you don't have. And if it's impossible for somebody that doesn't look at it every day to be able to look at a policy and know what they have. And so it's really important that you get somebody that you can trust, that's not just trying to make a sale, that's not desperate for a sale, that can tell you exactly what you've got. But a lot of things have changed. Used to, when companies rated you, it was based on just a few factors. I mean, it was based on your location, your driving history, and that was about it. If you owned a home in a neighborhood and you and your neighbor insured that home for the same amount, you're probably going to pay right at the same price for your insurance premium. But today, that's totally different. The insurance companies, of course, we've got computer programs now. The insurance companies have done tons of studies. They put all of that information into a computer program, and that computer program spits out your rate. So literally, you can pay for the same home, same value. You can pay twice as much as your neighbor, or you could pay half as much as your neighbor based on different criteria. Your insurance credit score is big. Most companies have been using that for years now. Agree with it or don't, think it's
what do you think the reason for the credit score, just in your opinion?
I think they've done studies, and they deal with the law of large numbers is what insurance companies deal with. And there's exceptions to every rule, but in general, based on their studies and the things that they've looked at, if you've got worse credit, you're higher risk of filing more claims. And so I don't know the logic behind that exactly. If you've got really good stellar credit, you've got less risk of filing more claims. And so, like I said, there's exceptions to every rule. You can have really good credit and have a really bad accident, and that's just happens. But in general, if you've got better credit and they've got the studies to back it up, and every company's doing it now, you're a better risk. And so there's some things that they do that I don't understand. I don't know how all their information goes into those computer programs, but man, they definitely have a computer program where we plug in information, and based on that information, your rate can be totally different.
I mean, you got to think, as insurance being a business, it's almost like baseball. Numbers matter. So you're running every number you possibly can, because
absolutely
the goal is to make money, to have a good company where you can make money, because the last thing we want is insurance to go south. And so,
no, that's for sure. If insurance goes south, then, borrowing money is done, and everything goes downhill from there. But they want to gather as much information about you as they can to predetermine what kind of risk they think you are.
And to me, that's called tentative business.
Yeah. I mean, I think you have to.
Yeah. So let's go down the whole auto rabbit hole a little bit. So I see where auto insurance is up 22%. So I see in California, 54%.
Yeah.
So let's just go ahead and kind of go towards where a lot of people, I think, in my opinion, because I would probably go there until I went down all these rabbit holes on this research and try to get ready for this podcast. Because this is one of my more nervous podcasts. This is outside my realm of information.
I'm sure that's right.
But the good thing is, it's amazing what you'll learn. And so obviously, I think for most people, when you see insurance going up like these numbers, I think first thing most people are thinking of is greedy capitalism, businessmen trying to gouge the insured.
That's right. And I've told many people, nobody feels sorry for an insurance company. Nobody feels sorry for an insurance company. And the reality is right now, they're paying out more in claims than they're taking in. They really are. Their loss ratios at the end of last year, they are literally paying out more than they're taking in, and they've got to stop it. It's not something that can continue. And so, they've got to figure out ways to be profitable and protect at the same time.
So just to have your back on this conversation here, where you're not thinking that I'm just like trying to throw you under the bus as a greedy capitalist. So just the numbers that I found since I started researching this was last year alone, 2023, insurances have lost $242 billion. So that's pretty hard to keep your doors open. As I've seen where Geico left California.
Yeah, and there's others
Auto
that
insurance.
have left California.
New car prices are up 11%.
Yeah.
Used car prices are up 37%. Repairs, just to get your car repaired, is up 11.6%. And that's an average repair would basically cost $4,700. So that's high. Another one, car theft. That one's up over 30%, and that's doubled since 2019. We had Kelsey Domer the other day on a podcast. She got her vehicle stolen in Houston. The cop there said that just in Houston, 85 to 100 cars a day get stolen.
Yeah, that's unbelievable.
And they say the white Ford is one of their most popular ones. So like dualies and things like, I guess, are the easiest to break in for whatever reason.
Every year, San Antonio, Houston, people going down there to stock show, to the rodeo.
Yep.
We have people every year.
We stay inside the gates there every time we go there. But also Jackie has a bus, so those are real hard to steal. But even like say going in there with our rigs, we went in there and, like I said, Jackie and her actually went to the aquarium together, and just happened where they stole Kelsey's and not ours. But yeah, I looked at it. It said one vehicle is stolen every 52 seconds. It says more than 100. It said more than 1 million vehicles were stolen last year.
Yeah,
I mean, that's wild.
I believe it. And that's
so that all goes to the consumer.
All of that adds. The prices of the vehicles is probably one of the biggest ones. Just because, you used to could hit a deer and you had a $500 or $1,000 claim. Now you hit a deer, and I've seen them totaling out some Ford Expeditions because they hit a deer.
Well, yeah, especially if you go up north and you hit a moose.
Oh, yeah, absolutely.
Those things leave a decent mark.
Yeah, I bet they would. No, that's exactly right. And, it's
here it's like a big dog most of the time, the deer. You know what I'm saying? It'll still mess some stuff up.
And you can hit a hog.
Pigs are, hogs are the worst things, right? It just tears your whole front end up.
Absolutely. And I've seen them rip. Even motorhomes and buses, I've seen them rip generators off, hogs going under there and doing all kinds of things. So all of that stuff contributes. The main contribution, or the main contributor to me, is just the cost of everything. I mean, the claims we're hitting deer, but just the cost is what's so high. I mean, the inflation.
And to me, that's so interesting because, when it comes to government policies, let's just stick with that term, without getting political, is... when they start calling everything price gouging, I've seen where some of the administration has been calling the grocery stores price gouging.
Right.
Well, then you look at the grocery store's profit, 1 to 3% is all.
Yeah.
So when they make $100 million, that's gross. By the time their net comes, it was 1 to 3%. That's it. Like, why would you even be in that industry?
No, that's exactly right.
Now what they're doing is some of these policies are creating now to where the insurances are having a hard time. So what do the insurances, who do they have to report back to?
Right. So they're
shareholders, investors, right?
And they're
so when they look at this, they're like, look, this is losing money. Why are we doing business there?
Yeah.
Well, because I guess we don't. Yeah. So a lot of stuff's pulling out of California.
And that's why you'll
wild.
see the California, they'll go to their Department of Insurance, and if they say, hey, this is what we need to charge a customer to make money, and if that Department of Insurance doesn't allow them to charge that, then they have to make a business decision. Do we want to continue in this state, or do we want to try to make it fit under this premium that they'll let us charge? And most of them have decided, especially out in California, that they're just not going to do business in that state. Well, then when they pull out, you have a whole set of customers that needs the place to go, and the companies that are there may not have, you have to have so many assets, available to you as a company to be able to write business, and they may not have the capacity to take on all those new customers. So then the state government ends up writing a policy that you can get. If nobody else will take you, you can write it through the state. And so, it becomes a mess. And in Texas, nobody's really pulled out because they're letting them charge what they need to charge, which you can agree or disagree with that, but that's just pretty much where we're at.
And it's hard because, like, I looked up, I think the number one state for auto theft was California. But what's sad is the fact that, like, I kind of like to think Texas is pretty conservative, and we kind of have our laws, but no, we're number 2.
Yeah.
And then Florida's number 3. So the
Yeah.
theft has gone up rapidly, which, like I say, when
Absolutely.
you're having to pay it out, it doesn't take, I mean, you have to keep the doors open. But then I
Yeah.
think now, too, is like I say, that crunch right now of everything that's going on between either your policy, you know, of where you live, obviously on how your government is ran, and then also inflation.
Inflation.
There's so many things going on there. And so who's getting crunched is your middle class that just can't afford all these other things that have gone up. Well, and then it shows, I think, like in Mississippi, that's the highest place without people they can't afford insurance.
Yeah.
So people that don't have insurance is 30%.
Yeah,
on their vehicles.
That's a crazy number.
That's 1 out of 9 drivers.
Yeah, that doesn't have insurance.
And so then they end up hitting somebody who is insured and they run. Well, now who's left with the bag?
Your insurance has
Insurance.
to pick it up. Yeah,
So it's
that's
it's
exactly
just a
right.
wild west we have going on right now, and just the amount of dysfunction in a way that's making it very hard, like you say, on the middle class and really the poor.
Yeah.
The guys that have money is not.
The guys that have money, it's not a big deal. And if their deductibles go way up or they change the way that they pay for roofs in the state, is not that big of a deal. But on somebody, like we had someone in our office in the last month who's, you know, mid-70s and she's widowed and she's on a fixed income. And that person right there, you know, I had given you an example the other day or earlier today about her. And, you know, she had a policy where she's out of pocket $3,500, and she had a quote from a policy where she would be out of pocket $14,000 in the event of a claim. And someone on a fixed income, you know, $14,000 to be out of pocket in a claim is just not. I mean, it doesn't work.
Yeah,
it doesn't work.
Oh, well, then I think would this be probably the last one that I can think of that will also be creating auto insurance to go up? The fatalities have gone up. I think just since 2018 was 36,000 fatalities, almost 37. And then right now we're up to 42, almost 43. So it's up 18% just in the fatalities. So, I mean, that is another thing that gets paid out on the insurance.
Yeah, and so the insurance companies will talk to us. They talk to us a lot about what they call social inflation. And so, you know, if you look at since COVID, for sure, what the juries are awarding in the event of a lawsuit, it's unbelievable the amount of dollars that they're giving as a verdict. And so that's got insurance companies running a little bit scared, because if you're driving around and you've got $1 million liability limits and you hit somebody, I mean, there's $1 million available. Yes, if you've got a $100,000 truck, that insurance company's at risk of a $100,000 loss. But when you're running around with $1 million liability limits, anytime you make a mistake, there's $1 million at stake. And so when you talk about insurance rates, auto insurance going up, that's our most risk probably, because we're driving around everywhere. The liability from our property is, you know, we're a little more in control of that. Who comes on, who doesn't, and what kind of risk we have or allow on our property. But when you're driving a car around in public, like, that's your biggest risk. And if you've got $1 million liability limits, that insurance company could be on the hook for $1 million in the least mistake.
And especially opposed to the person who doesn't have insurance.
Correct.
Who just runs.
Right.
And then you're holding the bag and stuff.
That's exactly right.
And
And
those are tough.
yeah.
So I've got 2 things that kind of concern me a little bit just in my line of work, and I think in a lot of other people's too, with just to be the understanding, especially on the auto insurance. So I rent cars quite a bit because I do a lot of clinics and stuff. So when we fly there, a lot of times we'll have to rent cars. And so what is some of the, when you have a chance to where, so when I rent a car, I said, no, I already have my own insurance. When they ask me if I want to buy the extra insurance, I usually decline it because I have my own insurance, as opposed to also buying theirs. So what is the high and low on both?
You have property damage on most of your policies that are going to cover a vehicle that you rent in your personal name. If your policy's in your personal name and you rent that vehicle in your personal name, if you have a personal auto policy, that's more than likely going to pay for that rental, and you wouldn't have to purchase that. On the more farm and ranch type of contracts or policies that you may have, you definitely need an endorsement that you may have to add to make sure that that's covered, a hired car, a non-owned vehicle endorsement, or something like that. But there's definitely ways to make sure that it's covered. But you definitely need to get with your insurance agent and look and see at your coverages and make sure that your policy is going to cover that rental vehicle, and not just the physical damage to that vehicle that you rent, but then the liability that goes along with it. So if you hit someone else in that rental, that the vehicle that you're driving is covered and the vehicle that you hit is covered as well.
Now, what about, say, someone else drives the vehicle?
Yeah, that becomes a lot more sticky. I mean,
because if I rent the vehicle, it's in my name. And then say someone else driving it, and then take over from there.
Comes a lot more sticky. You've got the contract on the vehicle, so if you're renting it in your name, then you're definitely liable for the damage to that rental car. The damage to someone else, the person driving, that could come back on their policy, or it could come back on yours. There's some circumstances that may change it, but absolutely something to keep in mind. And even with your personal vehicles, if whoever you allow to jump in your truck and go down the road, you're basically, whatever they tear up, that vehicle's titled to you, you're responsible for it. So before you let somebody jump in your truck that may not be the best person to drive it, you got to be really careful. And we talk to farmers and ranchers all the time, and business owners who, they need good help. And that guy that's really good help and works really hard, he may not can drive worth a flip.
Yeah, I've seen it.
And so, if you need those cows hauled, or you need that hay hauled, or those horses ran here or there, you may let somebody jump in your truck that you might not normally, just because you need it done. And so that's a really big risk when you're putting people behind the wheel of your vehicle.
So as far as like guys rodeoing and renting cars, I might just throw myself under the bus just in some of the instances that I've had when I was rodeoing and renting cars. I don't drive them now like I did then. My first year making the NFR, I blew up 3 of them.
Yeah.
Just because it was fun, man. I didn't know if I'd ever come back. I had to rent a car. If it wasn't mine, man, I'm telling you, I tore up 3 of them. One of them actually blew up right in front of the rental car place. It was awesome. It was so cool. And then the next year, I blew up another one. And then after a while, they kind of like, I had to help, someone else had to put it in my name, and I had to kind of clean up. I think it was after that one year. So there's these launching pads behind the UNLV stadium. They're speed bumps, but I call them launching pads because they're so good. The last one actually has a dip before the speed bump.
So you can get
they're
lots
like
of
that
air.
Tall and that wide. You almost bottom out. Like they're so good. And when you hit them at, between 45 and 60 miles an hour, like you catch bitchin' air. And especially the old ones with the middle e-brake, oh man, that was a sauce right there. You could slide it, and it was raining even better.
Yeah.
Right. Well, then after a while, I kind of torched up my e-brake a little bit. Well, then I ended up actually kind of sliding through a cyclone fence and hit a curb. And so anyways, long story short, everyone told me back then you couldn't put a price on fun.
That's
I found
true.
out is you can, because I think the paint job was $1,200. I think the axle was $1,500. And the spare tire was a few $100 too. But yeah, you can't put a price on
You
fun.
can put an exact price on it.
The best
what it
one was
costs you.
when, so this is like, I'm having real bad, I'm not having good luck renting cars from then for a little while. So I kind of started slowing down until I got to the circuit finals one year, and they give me a Mustang.
Oh, shoot.
And I'm like,
Do they know
seriously?
my record?
I'm like, they're like, all we have is a Mustang. And even the kid with me, Garrett Jess, one of my best friends, and he's like, that's not a good idea. And I even told her, I said, I don't know if that's a real good idea. Does it have a middle e-brake? She's like, yes. I'm like,
Oh, no, we're in trouble.
nice. This is going to be so much fun. And I'm like, are you sure that you're wanting to give me? Like, that's all we have.
That's it.
All right, it's up to you then.
Oh, shoot.
Hey, I did the barrel pattern in the warm-up arena with it. It was so much fun.
Yeah. So, note to self, don't let Charlie drive your truck.
Well, yeah, I don't do that anymore.
That was a long time ago.
Yeah, especially with
Okay.
my insurance agent sitting right here. I don't do that anymore.
I don't do that anymore.
But they were like, hey, do you want the extra insurance? Yes, I do.
Yes, I do. Absolutely. And that's part of it too. Like I tell people sometimes, if it's not very expensive to get the extra insurance, just get it, because if you do damage that rental car and we have to file it as an at-fault claim now you've got an at-fault on your record.
Well, I also grew up watching Days of Thunder.
Oh,
when they rented the car and just went to running each other on the beach. Like it was the coolest thing
There
ever.
was no cost to that.
Yeah, that was so much fun. Yeah, it's a different time now, and I'm a little older.
It's a
I'm
different
matured.
time now.
So one other question as far as when it contains to ropers and people out here in this industry is the pickup and the horse trailer. Yeah. They say that, is it in Texas, maybe other states, but I thought it was maybe in Texas. Just to clarify the myth, when they talked about the trailer is insured because the truck's insured.
Yeah,
so
you
walk us
might
through
have
that.
heard your dad or your grandpa say, "Oh, as long as that trailer's hooked up to that truck, it's covered," and that's not 100% the truth. So there is some coverage in most instances where your policy, depending on the type that you have, the liability will extend from the pulling unit from your truck to the trailer. Basically, if you hit somebody with your trailer, then the liability is going to come off your truck, but there's no real damage or coverage for your trailer itself. So there's a lot of people that feel like if their trailer's hooked up that they have full coverage on their trailer, but that's just not the truth. That's definitely a wives' tale or something that my grandpa used to say, and it's just not the truth. But There are ways to extend it, and most of them will extend it. If you have a true farm and ranch policy, it should extend. But when you get into heavier, a lot of it's based on weight. If you get to anything over a 1-ton truck, an F450 or a mini Pete or any of that stuff, there becomes a time where you need to add that trailer for its own liability, and it's not super expensive. But you can add it to your policy and make sure the trailer itself has liability.
Because I think it's the most common of thinking like a pickup and a bumper pull trailer, to where then that bumper pull is, insured by the pickup. Well, nowadays, these, pickups pulling these, $200,000, $300,000, sometimes $500,000 horse trailers.
Exactly.
A lot of them guys are taking out loans to buy these. Well, then there's insurance that are needed. So,
correct.
They're almost covering, the loans are covering the making sure they're covered on their end where they have to insure those trailers. So this was always kind of the ones I heard was like the bumper pulls or the little pull.
No, any of those trailers, they should, depending on the policy you have, but in most cases, the liability should extend, but liability only pays for damage to someone else. That doesn't pay for your damage. And so it should extend in most cases, but there are circumstances where you need to double check and make sure, and especially if you've got bigger trucks that you're pulling trailers with. That's
my
things.
Next question.
Yeah.
So what's your difference between pickups, 450s, semis, RVs?
It's all based on gross weight. And so different companies could have some different guidelines, but and you can add endorsements to get that coverage. But the safest thing to do if you're driving a mini Pete or a bigger truck, anything over a 1-ton really, is to just add your trailer to your policy for liability. And if you want to add full coverage on there, you can, but make sure it's got its own liability, because there are some circumstances where you get into the heavier weights of trucks and you get it on a commercial auto. A lot of those companies are writing those big trucks on a commercial auto policy. It's not quite the same as your personal auto, and you need to make sure that you have the right endorsements. Make sure that that trailer itself has its own liability.
Because there is a lot of guys that rodeo for a living, and I was one of them that had a semi. Because, you can buy a semi dollars on the penny, to a pickup, compared to, and they're built for it. They got bigger brakes, bigger tires. You can see higher. I loved the fact that how much safer I felt in a semi compared to a truck.
Sure.
And like I said, I remember one time I bought a truck for $22,500, put a bed on it, rodeoed out it for, I think, 5-6 years, sold it for $20,000.
Right.
Because they don't really lose their value because they can go 1,000,000 miles easy.
Absolutely.
As opposed to a pickup where you lost 10 grand driving off the lot,
Mm-hmm.
and then you're only going to probably get 2 to 3 years out of them.
Right.
So it is a very common vehicle that's purchased in this industry because of the convenience of it. So
yeah, and you can
the
get some
insurance, I remember,
coverages.
was a little bit tricky at times.
Yeah, thinking about, you just need to make sure you're protected going down the road, especially rodeo guys or driving up and down the road, big farm and ranch guys hauling hay and cattle. They need to make sure that they've got the right liability, because that's your biggest risk. And that's where you want to make sure. And that's what we do every day. We're trying to figure out for the best price that we can, how to protect you the best way we can without any gaps, without any holes, and make sure that the things you work for and put together in life, your assets, that we're trying our best to protect them so nobody else can take them from you.
So what about homes? So I seen where you said, I think in Texas, around 60% increase is up.
We're seeing a lot of that. Yeah, average 60%.
Homes have gone up as far as buying them. I just read a deal this morning where 7% of homes that are being sold in California, if they're approved for the home, once they get their insurance, they're like, I can't afford it. Can't afford the homeowner's insurance. So like they said, I think it was 1 out of 14. Realtors said 1 out of 14, even if they're approved by the bank, can't buy the house because they can't afford the insurance. It's like 13, whatever it is, 13,000, whatever it is. And so that's been real big. And I've seen where even State Farm is pulling out. As of July 3rd, State Farm is not renewing 30,000 policies in California.
Yeah, I believe that. And that goes back to being able to charge what you need to charge to be profitable.
Because I think that's what is it, the CARE Act or the FAIR Act that I think that they have going on in California.
So there's a FAIR plan.
They're not implementing that. They're not implementing that here in Texas.
So we do have a FAIR plan in Texas. So a FAIR plan is basically if you're denied by 2 other insurance companies, or you can't find an insurance company to take your home or your risk, then you can go through, they call it the risk pool or the state FAIR, the FAIR plan. And basically it's the state that you're writing the policy through, and they'll write it so that you can have coverage. But the premiums are what the premiums are, and but the box is getting smaller and smaller. These insurance companies right now They're losing money. They're tightening their guidelines. They feel like every home they have on the books, they're losing money. So it's no different for you. If you every time you put on a clinic, you lost money, you would put on less clinics. I mean, it's a business deal.
You have to go up.
Yeah, you
can't do it.
You got to go up,
Yep.
or you got to figure out.
No different than what anybody's doing.
No,
as
that's
far as
right.
living.
That's exactly right.
And so that's another thing too, that repairs have gone up. You know, the price of, especially after COVID, that was real wild, because then the price of lumber went skyrocket. 2x4s went sky. I mean, everything went up so much. Well, then when they file a claim and all of a sudden they were insured for this, well, then all of a sudden all the other costs came up. That's where I don't know if maybe the insurance, maybe 392 billion or something like that. I think they're losing on that.
It's unbelievable. I mean, and you know,
and then weather.
The weather.
You know?
It's record weather. They've had record weather the last 5 years. You know, we had a tornado we talked about earlier that stayed on the ground from like south of Bowie all the way across I-35 all the way to Sanger, I think. I think a F3 tornado this last year was on the ground for like 35 or 38 miles. I mean, that's just unbelievable devastation. And, you know, it's record weather events, which the insurance companies, you know, from their own projections, they did not see. But then they also didn't see the inflation. And the inflation on top of record weather has just put us in something that's going to be difficult to dig out of. And so insurance companies they're trying to figure out, what do we need to do going forward to be profitable? And the claim that you filed last year or 2 years ago, and the way they paid your roof claim, the one that you file in 2 years from now probably won't look the same. You probably won't get the same payout, because insurance companies are trying to figure out how to be profitable going forward and what they need to do. And they're doing some things that we've never seen before. I mean, with deductibles
because I grew up in the Northwest, and so like Oregon, Washington, that, you know, in that area, and nothing happens.
Yeah.
You know, homeowners insurance almost really wasn't anything even my parents talked about.
Yeah.
You know, now you go to California, now you got wildfires. Now it's wild, you know, the amount of wildfires going on down there. Homes just getting wiped out. And then here, hailstorms, tornadoes. You know, there's a lot more devastation in those places right there where, you know, when I talk to some of my friends at home about where my insurance has gone up on this in my home, they're like, nothing. Like what?
Well, and
the weather does have a lot to do with that.
Yeah, I've got an example of a guy. I use this example a bunch, but you know, last year he had a hailstorm, and he had an estimate from a roofer. All of his house, his barns, he had an estimate from his roofer for $400,000. Well, he only pays $20,000 a year, and his insurance, his farm insurance is $20,000 a year, and he's got a $400,000 estimate. Well, it doesn't take you very long. I mean, that's 20 years of premiums if nothing else happens in 20 years. And then if an insurance company wants to run at a 50% loss ratio, well, now that's 40 years of premium, but to pay for one hailstorm. Like it just does not, the math doesn't match, and it doesn't work. And so they've got to figure out how to do it. And that's where cosmetic exclusions have come in on metal. So if it's just got dents, they may not owe for it. And you can look at your policy and see, but that's something that started around 2015. It's something that's pretty much standard now. I mean, if you've got metal, you probably have a cosmetic exclusion. You can check and see that, but then, you know, they're upping our deductibles. A standard for the last several years has been a 1% wind and hail deductible. So if your house is insured for $350,000, you had a $3,500 deductible. Well, now the standard's becoming 2%. So now that $3,500 deductible has become $7,000. And then not only that, we've always been used to, for years, since I've been in the insurance business, used to full replacement cost policy. So you pay your deductible, insurance company owes 100% of the rest of what it would cost to buy you a brand new roof. Well, now they're starting to look at that and change that to possibly what they call a roof payment schedule or actual cash value, where they're going to pay you based on the age of your roof. So we had that example that came in our office the other day. She had a policy with us, and she was paying $4,200 a year, and she had a 1% wind and hail deductible and 100% replacement cost. So if she had a hailstorm and had to replace her roof, she was going to have to pay a $3,500 deductible, which is the part she has to pay. The policy she brought to us was $2,800 a year instead of $4,200, and she told me, she's like, Brandon, we really don't want to leave, but man, this is $1,400 a year we're saving, and it looks like it's the same. And so we dissect the policy and we start really looking at it. Well, she had a 2% wind and hail deductible, so her deductible immediately went to $7,000. And then she also had a roof payment schedule, which means based on the age of her roof, they were going to pay her like 30% or 70% of the roof. So she was going to have to pay the other 30. So with one policy, it was $4,200 a year. she's out of pocket $3,500 in the event of a claim. The other one, it's $2,800 a year. But when we did the math, she was going to be out of pocket $14,000 to replace her roof. I called a roofer friend and I'm like, hey, what, based on the size of this house, what do you think this roof would cost? He's like, man, probably $18,000 to $20,000. And I'm like, so she's going to have to pay $14,000 of an $18,000 to $20,000 roof. And she was just trying to save $1,200, $1,400 a year. And so, especially right now, you got to be super careful. If you're just looking at price, you could end up in a situation with your claim where you're out of pocket way more money than you want to be out, for sure.
So just like for some young kids might be listening, maybe they're out of college, they're maybe out of school, and dad says, all right, time for you to go to work, time for you to start paying your own end, helping them understand kind of your descriptions of your words between premiums and deductibles.
Yeah,
just kind of help walk them through that.
The premium is the part that they're going to draft out of your bank account every month. That's the part that you're going to pay in premium and money. That's the money you're going to pay every month. Deductible is the first part of the deductible is what you have to be out of pocket. So if you have
say, what's the lowest deductible you can get?
On auto, there's some carriers out there, personal lines, that allow you to have a $50 deductible on comprehensive coverage, which I don't recommend that at all. But on a home, you can get, wind and hail, the least you're going to be able to get right now is probably 1% of what your house is insured for. So if you have a $500,000 house, it's $5,000. Now you can get all other perils. There's two deductibles, which is probably way too much detail for most people, but you can get an all other peril deductible that's lower than that 1%. But you're not going to want to file those little bitty claims. That's what I tell people all the time. You can carry a $250 deductible on your auto policy, but if you come in and you have a $300 claim, like, you're better off paying that out of pocket. There's no reason to file a $250 or a $500 claim and have it on your record, because these companies have always looked back 3 years. Now they're starting to look back 5. So, if you file this one as an at fault, it's probably not a big deal. It's a $500 claim. It's not a big deal. But if you have another one in 2 years from now that you have to file, now you've got 2 at faults in a 3-year period. And that's when insurance companies really start looking, and all of those little factors are going to plug into that computer program and change your rate. Everything.
Now, you mean by at fault, like you created the accident?
It was your fault. Yeah. If somebody hits you, it's different.
And then accidental would consider someone else hits you, weather, a deer jumping in front of you.
Yeah. So there's comprehensive coverage, which is anything that's said to like hit you. Comp is like hit a dog, hit a deer, hail damage, theft. Those are all comp claims, and you have a deductible for that. And then there's collision, where you hit a fence, another vehicle, a building. If you have a collision, that's a different deductible.
That sounds like my rental car career.
Yeah, right there. That was all collision.
Makes sense. So what's the cap on how high? So like the lower the deductible, correct? Mm-hmm. The higher you're going to premium is you're paying per month is coming out of your bank account.
That's correct.
Now, what's the highest cap you can get to get the lowest premium?
So on auto policy, we've got some carriers that'll write $5,000 deductibles. We may even have one that would write $10,000 on property, and we've got some that are writing $25,000 deductible per building. And in some of those cases, you basically have no roof coverage. But so it just kind of depends. You can do anything. Everybody has to decide what their risk tolerance is. The lady that came into our office, and there's no way she would be able to write a $14,000 check to replace the roof on her house. And so she has to figure out, okay, it's $115 a month more, but I can afford to fix my house if I have a claim. And so everybody has to figure out what their risk tolerance is. There's a lot of guys that we have that, on their place, they may not insure a barn or two. They may not insure some runs or some shades that are out in the pasture for horses. And they feel like if that thing blows away, they can just build another one back. That's not going to be a devastation to them or a financial problem. But, we work on liability a lot, which is coverage that pays for someone else's damage. So if you hit their vehicle or do damage to them, liability is the big kicker, because that's where they're going to come back to you and want you to pay for their damage. And so you don't know the number there. If you don't insure a $30,000 barn and you decide, I don't want to insure it, I don't want to pay the premium, you know what your risk is. Your risk is $30,000. But if you've got liability out there and you hit somebody and maybe there's a major injury or a death, you don't know what they're going to come back to you for. It could be a number that you don't know. And so, liability is the biggest thing. You know, with your auto policy, having really good liability limits is super important. On your farm and ranch policy, having all of your locations listed, because what you're doing is you're taking $1 million policy and you're extending it to every owned or leased piece of land that you have. And you need to have every one of those listed on that policy to extend that $1 million. If you have one that's left off the policy, there may not be coverage to that one, and you've got a gap in your coverage. So you just really need to look and make sure that you've got all those T's crossed and I's dotted.
So as far as rodeo cowboys that are still renting cars like I used to do, is there any incentives or like deductibles, like when you set the arena record in a like a Camaro or a Dodge, like, you know what I'm saying? Like, I mean, I still got the arena record
there should be. I
there
bet you do have that.
There really should be.
I bet
agree with you. There should be.
Somebody listening to this will probably try to say, I think I might have the record. They're going to probably call you and get the details.
I need the ribbon. Yeah, I need to get a ribbon next time.
Someone else
got proof.
may think they've done better.
What about so you said farm and ranch is one of your biggest, correct? Mm-hmm. So explain to me a little bit on farm and ranch. For one, would you just go down the farm and ranch, and I got a couple questions for you after that? Yeah,
so I mean, we've got, we do any kind of farm and ranch. If you've got from a small hobby farmer that has maybe a horse or two or a few cows to major farm and ranch, feed yards, dairies, any of those operations, we can do pretty much the whole gamut of farm and ranch. You can even get into some farm and ranch stores, feed stores that can be considered farm and ranch. So anything with livestock, cattle, equine, that's pretty much where we specialize. And we do of course, your property, your home. We add your barns. We can add your equipment. And there's a lot of things out there coverage-wise and bells and whistles that these farm and ranch carriers can add. One of them for like rodeo guys or for equine guys would be, there's an endorsement that you can put on your policy, your farm policy, that would give you like $20,000 worth of tack on your premises or away from your premises. And it includes theft. So like,
I think I'm insured through that.
How many dollars do you have in your tack room right now of tack that you're driving all over to Houston, to San Antonio, to all these places? To have a little bit of coverage there is a big deal. And that's not an easy coverage to find, but we've got some companies that write that specifically. And so, there's things like that we can cover for you if we know what's going on. But yeah, we're going to write all your locations. We're going to add them on there. We're going to write your barns. We can insure cattle. We can insure your horses. We can insure, it depends on your risk level. If you've got some $10,000 horses and you can afford to lose them, then you may not want to insure those. And I don't blame you. But if you've got one that's special and you could never replace, and then you've got to, that may be one you want to insure. And
between that and being partners, when you're partners with someone, you want that insurance to where, then otherwise if that other, So you're partnering with horses, or somebody else owns a horse, there's definitely going to be that.
And we can write that, we can write that coverage. There's some coverages that are like for boarding, breeding, training. If you're doing horse training, you can get some liability coverage. There's some coverage that if you've got custody of someone else's horses, it's called care, custody, and control, that you can add, that if you do something that you're liable for injury or death to someone else's horse in your custody and your care, then there's some liability coverage that you can add to your policy for that type of stuff. So there's a lot of coverages out there when you're trying horses, or you're if you're boarding someone else's horse. We talked about jumping somebody else's horses in your trailer. I mean, you can have a lot of dollars worth of horses, and if there's someone else's horses, you could end up being liable for any damage or injury or death to those things too.
So what you're saying, so that's why it relates to a lot of young kids with, jumping rides and saving fuel and things like that, So some kid got his own truck, he pays his own insurance, pays his own trailer, has his own insurance, everything else. Well, Billy Jack Buttcrack, he jumps in because he wants to get a ride to the rodeo so he can save some fuel. He's got some horses. But I kind of know a little bit that he might stab you in the back. I would just call it chicken shit. Maybe the kid's a little chicken shit.
Yeah.
And so if you get into, if the kid that owns the vehicle and he gets in the wreck and he's at fault, and those horses of the Billy Jack Buttcrack dies,
he could be potentially liable for some of that or all of it.
That's where you got to be real careful now on who's going to be coming in your rig.
Who's in your rig and who you let drive. That's huge. And if that vehicle's titled to you, then whoever you decide to let drive it Any damage they do, you're responsible for. So it's really important that the people that are driving your rig are worthy of that.
So also in Texas too, there's been some myths as well. So if you can help me understand this and clarify whether, true or not, is the barn dominiums. Because barn dominiums here in Texas, especially Stephenville, they're very, very popular. I've got one.
Yeah.
We want it to where we can hear if our horses are thrashing around and tying up or colicking or anything like that at night. And then also it's amazing how much room you have in a barn dominium. We have a place upstairs above our house, that we have a office, a workout room, and place for all of our rodeo guys to come and hang and stuff like that. And so barn dominiums have gotten very popular, but I've also heard that the insurance has been kind of sketch on.
It can be sketch. So some companies, they insure them different ways. If it's a barn dominium and it's your home and it's attached to a barn, different companies, some of them may insure them as just a whole home, which is what you would want. Some companies will insure them as a barn and then list your contents as extra. And you can do that, but the problem runs into when you insure it like a barn, then there's a lot of coverages you don't have. Weight of ice, sleet, and snow, and water damage you may not have. And so they'll write the house as a barn, and then they'll add your contents on. And, when that freeze happened a few years ago, there's a lot of people that got caught because they didn't have the freezing pipes and the water damage coverage that they didn't know they didn't have that in their barn dominium or their barn apartment. And so they got stuck with some freezing pipes and water damage. They had no coverage. So it's really important that whatever carrier you get will write your barn dominium as a metal home or as a total house. And they'll give you there's broad form coverage or special coverage that you need to put on it, as opposed to just like basic coverage that might come on a barn. So, there's carriers out there, and that's the part of being independent that we like, is we're able to find the carriers that write the right coverage. And so if you come to me and you've got a barn dominium and you've got certain things, we can find the carrier that's going to write it the way that you need to write it. And that policy that writes it like a barn may be cheaper, and that may be what you want to do if you're all about the money. But if you're wanting good coverage, then we can find that for you too.
So as a lot of people in my industry, we rope, whether you're steer wrestling, roping calves, whatever it is, a lot of these guys, to survive, a lot of times they're going to be putting on clinics, they're going to be doing some lessons, a lot of trainers that train at home, they have employees, they have cattle, they have horses in and out of there, they have people coming over for lessons, people trying horses. So what is kind of some of your layers that you have to where you're covered? I know you talked about the Chapter 87, but you also said there's some layers, other layers as well.
Yeah, so the Chapter 87 is part of what Texas gives us, and basically, if you have the warning language posted and in and around your arena and your barn, and you can go online and you can Google that and you can see exactly what those requirements are. But yeah, that's real important. Some insurance companies are wanting to see that those signs are posted. If you've got livestock or farm and ranch activity or people are roping at the house, they want to see that. But that gives you a level of protection for people that are participating. They know the risk that they're taking on. It doesn't protect you from some gross negligent things, but it will protect you from somebody that comes over to rope. They're riding their own horse, and they know that there's some risk involved when they jump on that horse to go rope.
Do you mind explaining negligence real quick?
Yeah,
that way some people at least have an understanding of what that looks like.
Negligence would basically mean, and this is why we have judges and courts and attorneys, because it's a little bit gray of, was I negligent? Was I not? Did I do something wrong? Did I not? And my attorney's going to say I didn't, and that attorney's going to say I did, and they're going to figure it out. But if you're determined to be negligent, then basically there's something that you did that caused that accident. I mean, a gross negligent situation would be if I have a 5-year-old that's never rode a horse, and I've got a horse standing over here that I know has been known to buck, and I decide I'm going to put the 5-year-old on the horse and walk it around the arena, and sure enough, he bucks and throws the 5-year-old off. Like, that's gross negligence. Like that's something you should have been smart enough for sure not to know not to do.
Some of the things I've also heard too is like parking your tractor with your arena drag right by the gate. So you've almost got to go around that to where if you're not paying attention, the horse steps in the drag. Like, that's also considered. Yeah. Watch where you're putting your stuff to where basically you're making an easy path for people to get in and out of where there's nothing in the way.
If you've got a tractor in the arena with hay forks sticking up or anything like that and a horse gets away, I mean, all those things could be considered negligence. And like I said, that's why we have attorneys in courts, and they'll argue back and forth whether you were negligent or you weren't. But the liability insurance comes in when you are negligent. That's where your liability insurance stands, comes to protect you basically. And so, but yeah, there's chapter 87 is good. Having those up, that's the basic thing. I would absolutely have those signs. We give those signs away to our customers to hang in on in their arena.
To me, that's almost your first layer that should protect you from your buddies coming over and coming roping. Maybe some other people are coming where maybe they're getting on a horse, things like that.
Yeah, that's
a pretty good layer right there.
It's easy, it's cheap, and absolutely. And then
then your second layer, it seems like now, if you're going to have a clinic at your house, maybe even lessons.
Yeah.
If you've got people trying horses, or if you're having a jackpot.
Anytime you invite the public onto your property, you're increasing your exposure, and that normal farm and ranch policy is not really designed for you to invite the whole public where you don't know anybody to your place. And so insurance companies don't really like that. And so, yeah, if you get a release signed or, the attorneys we've talked to, and I would absolutely recommend, I'm not an attorney, so I'd absolutely recommend talking to your attorney, but they can draw you up a form. I think it would have a hold harmless agreement in it. I think according to the Chapter 87 language, they want you, any contract that you have, they want you to have that language, that warning language put in that contract as well. And so, but you could talk to an attorney, and I would say, getting a release signed from everybody that's participating would be absolutely another, especially if you're having a clinic. Getting that release signed is extremely important. And like I said, talk to your lawyer about that, because I'm not an attorney. And then the next level, we write a liability policy on top of that. And
this is the third layer.
The third layer. So if you have premise liability, but then you can also do special event liability. And these insurance companies, if you're putting on a team roping or something, we can write a special event policy for your event. And then, but there's also some of these companies that if you're doing regular riding lessons or roping lessons, that you can add endorsements. And they're not always cheap because you're inviting the public on, but you can add endorsements to your policy that would cover boarding, breeding, training, anything like that. If you've got 15 horses that you board that are not your horses, you can get liability coverage, so that if there's something you do that causes injury or death to those horses, or the care, custody, and control that we've already talked about, there's some coverages out there that can protect you.
Well, that's great. Like I said, I think that really fits our industry.
Yeah.
It really fits to a lot of our listeners and things like that. And just like, say, for me, even just kind of going down these rabbit holes of learning more about insurance, and, because that is the hard balance of, what is it that I need to make sure I have, or I'm covered, and then what's also overpaying.
That's right.
You got to find that balance.
That's what we do every day, is figure out what's your risk tolerance, what's absolutely important that you have, and then what do we, something that maybe we can do without. And that's why I talk about barns and big deductibles, because you know what your risk is. When you have a $5,000 deductible, you have a $5,000 risk when you have an accident. But the liability side of that, you do not know what your risk is, because it's whatever the paper that they hand you with that lawsuit or whatever, that's the number that you need. And so liability is so much more important. Liability can absolutely affect Christmas. And a big deductible and stuff like that, may be within your risk tolerance.
That's what I always tell everyone when I had them sign the waivers here when I'd have a clinic here at the house. And I'm like, what is this? This is to make sure that if you decide you want to fall off your horse and you decide you want to sue me, you can have my debt.
Yeah, there you go. You can have my debt. And that's really right. But the way that the lawsuits are these days, insurance companies, we're seeing it in the umbrella world. So umbrella liability is like a cap over the top of your auto and your property. It's another layer of protection. And we're seeing insurance companies just not wanting to write big umbrellas because the way that they're handing out money, social inflation, basically handing out money and verdicts. But, the other thing is employees. If you have an employee that's just feeding for you on the weekend, or maybe they exercise horses, or maybe they do something like that, there's some endorsements you can add to your farm policy that would extend at least the medical payments and some of the liability to an employee, because your liability does not cover anyone that's a member of your household, and it doesn't cover anyone that's your employee. So if you have an employee that's out there working and gets hurt, There's really no coverage for that unless you have some employer liability, which you can add to most farm policies, or you can do actually workers' comp. Workers' comp is not required in the state of Texas unless you have 50 employees, but other states it's required for every employee. But I like workers' comp. It's something a lot of farmers and ranchers have not done in the past. But you talk about a lot of protection for you as a business owner and a lot of protection for your employee as well, because your employee falls off the horse, breaks his arm. He likes to know that his medical bills and wages are going to be paid. Where if he's coming to you with a doctor bill, are you going to pay it? Are you going to not? Is he going to be stuck with it? So workers' comp is a huge protection for the employer and also huge protection for the employee. So we recommend employee workers' comp all the time. At least if you just have somebody feeding on the weekends or part-time or something, you can do at least employer's liability to help protect you from that too.
Yeah, because I know a lot of trainers, they have a lot of employees saddle and unsaddle and herding turds, getting the steers up, working arenas, And then not only that too is like horse gets crippled. Well, now in order for him to continue to make money, he's got to stay in the arena. So one of those kids, more than likely, because that's all they can afford, is going to have to now get in your pickup and your trailer and haul that horse to the vet. Right. So what is some of the liabilities as far as like workers and them also, because most of these guys are working from home.
Yeah.
And then also the liability of when those workers are in their vehicles driving a horse to the vet or the show, whatever it is.
Yeah, if they're driving your vehicles all the time, you need to have those employees listed as a driver on your policy. And, there's some what they call permissive use where if it's just hey, I'm going to borrow your truck to run to the store, you can allow people to do that. But anybody you allow behind the wheel of your vehicle, you're going to be responsible for whatever damage they do. So you need to absolutely know that.
It's interesting.
But then, I have a lot of guys in construction, whatever else, and they joke. I talk about workers' comp, and they're like, well, I said, what are you going to do if the guy falls off the roof? And he's like, hey, I've told them all, you're fired before you hit the ground. Like, you're no longer employed here when you hit the ground. And they're joking. They're not being serious. But that's, what do you do in that situation? I mean, you have an employee that's hurt and has a big medical bill, and he's looking at you, and you're looking at him, and who's paying it and who's not, and what if I can't work for 6 weeks? Are you still paying my paycheck? Like, there's a lot of questions that'll come up in that situation. And, having the workers' comp in place or at least employer's liability takes a lot of that away.
Well, I think this is a great podcast. Like I say, the horse industry has taken off, especially the rope horse fraternities. Mm-hmm. So there's a lot of kids now that are wanting to go that route where they're starting to train. They're either training from home or they're, getting their start. This is important stuff to know to where sure these are all things that can happen. So
and we see ourselves as consultants. Really, I mean we're not trying to sell anybody anything. We want to work with you. Look at your risk tolerance. We want to look at your operation. We want to know your operation and what you've got going on so that we can best help recommend coverages and fit what you've got in with the carrier. So we're going to go find a carrier that hopefully will want to do what you're doing, and it's a long-term relationship. And any loss prevention stuff that you can do as an insured to make sure you file as few claims as possible is going to help your premiums. That's going to help the company, and it's going to be a long-term relationship. And you're right. When you talked earlier, we like it or not, the insurance companies have to win. They have to make money. And so, and they're regulated by the state. So,
mm-hmm. Well, and I like it. And we talked earlier too. It's just, to me, it's just so much more important to have a relationship with someone who understands the industry, because trying to explain, what we do in this industry to somebody sure. in the city, it's just the conversation's going to go in a lot of different ways. And
there's people that have been insured with companies for years that we talk to. They're like, oh, I've been with this so-and-so company for 20 years. And I'm like, well, let me tell you about some of these new endorsements and new things we can add. And like, they have no clue what's available to them out there because they've been with one company for so long that may or may not offer a lot of the coverages that are available now. So,
yeah. Well, I appreciate your time. I learned a lot.
Sure. Well, I appreciate the time.
It was fun. I'm glad you've been winning too. That's
Man,
awesome.
It's always fun to win.
It really is,
Charlie. Always really fun to win. And we got another open coming up this weekend, and then we got the title fights out in Abilene, and we're open for a bunch of money. I've got some really good partners lined up for Abilene, so we're excited.
Come September, till about the middle of November, Texas gets real good.
Yeah.
The weather starts letting off. The evenings are already starting to get nicer. The mornings have been real nice. The jackpots are starting to come back because it's been too dang hot during the summer. And then it's just a good warmer upper to try to hopefully get tapped off for, Arizona in November, and then obviously the World Series finals in Vegas in December. So
lots of good roping coming
good time
up.
to get tapped off.
It's fun.
Well, for anyone interested in talking to you, questions, or to be able to get insured through BC Group of Texas, how's the best way to get a hold of you guys? What are some of your outlets?
You can call the office. The office number 254-965-2839. You can email me directly, Brandon at bcinsurancetx.com. You can follow us on Facebook and Instagram, and that's BC Insurance of Texas on both of those. And we would love for you to follow. We've been doing some weekly informational videos just to kind of, there's so many changes going on in the insurance world right now. We're just trying to do some small educational videos to keep up with stuff. And so follow us on there. We would love to have that and keep up with what we've got going on. If we can help you at all, call or email. We'd love to help you. And we've got a whole team at the office there in Stephenville that would love to sit down and go over and answer any questions.
So are you able to use your social media sites for, like, say, new things that are happening and new insurance or new deals, things like that, where you're keeping the public kind of engaged with either what's going on or a best way to insure yourself in these situations? Is that how you kind of use your marketing?
We've got some coming up right now about how to stack your hay. As far as from the insurance perspective, a lot of companies have a stack limit, so they'll only cover a certain amount per stack. And then what's a stack look like? And so we've got some videos like that coming up. We've got videos on the roof payment schedule that we talked about earlier, the deductibles going up, and exactly what all that stuff means. So we're just doing they're probably 30-second, minute-long videos that are just things that come up or questions that we get asked or things like that. We're just trying to post like one a week of just little informational videos. So there should be some good information and some more good information hopefully coming on there too.
That's really good. And that's the BC Insurance Group of Texas. That's the
Facebook and Instagram. The website is bcinsurancetx.com.
That's what I was going to ask you next. You have a landing page website.
Yep. You can click on there, look at our team, look at what we've got going on. But call us. We'd love to help answer any questions for sure.
Well, I'm glad you guys are going on the offense a little bit, because right now you've been on defense, because I've seen on TikTok where they were actually showing people how to break into cars.
Oh my gosh.
So
there's no telling what you'll see on TikTok.
Yeah, I forgot what it was. This guy, I think it was the Kia or something. They call him the Kia. Was that what it was?
Probably a Kia. There's some
companies. The Kia Bandit, where he was showing people how on TikTok how to break in, and so now they won't even insure them.
A lot of companies, if you call with a Kia, certain Kias, then a lot of companies won't even give you a quote.
Yeah, the bandits are winning on social media, so it's a good way to attack back right there. I like that.
That's exactly right.
Go back on the offense.
Hey, you got to.
Dang right. Well, man, I appreciate it. Thanks for your time. I learned a lot.
And thanks, Charlie.
Like I say, good luck with the jackpots.
Yeah, man. Thank you.
Appreciate it.